Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I zoom in here, you'll see the lines that are left from last week's report, where I extended this down to a price target of 343.78. While we did not hit that today, we have breached the gap fill support level. Right there, as I expand that, you'll see a slight little gap. Now, 80% of the time, gaps fill, which that has already occurred on Monday. But 80% of the time after gaps fill, we usually get a bounce. But what's interesting here today, going back to this red candle from the close today, you'll see that the red candle is now below this key support level, and down below here you see that the volume is actually increasing on the way down. So now that we've hit this target here, I'm going to erase that and continue on with this downward leg. I do believe next week we're going to continue lower, possibly all the way down here to test this support level. So I think the bears are in force right now. There's a lot of concern over the debate over the debt ceiling and whether or not that's going to go through. There's still continued concern about our shipping lanes and the congestion that we're seeing in the supply chain around the world. So I think investors are getting a little nervous, but conservatively, I'm putting that price target now down to 342.04, and that's for the diamonds. Now, moving on to the spiders, ticker symbol SPY. You can see again, I left my lines on the chart from last week's report. We've hit these targets, and again, the volume is increasing on the way down. So I'm going to just extend this out for next week. I think we're going to go all the way down here to test this support level right there, and I'll give you my target here in a bit. So next week's target for the spiders is 437.29. I still have this long-term target down here of 411.16. We'll get to that eventually, but right now the short-term target is still lower. Over time, what I think we could see happen is a possible bounce, maybe to retest this moving average all the way up here, but I think eventually it's going to turn down, and we'll see that moving average act as resistance as it reverses its role. Now, going from the SPY to the VIX, as you know, the VIX is most often inversely related to the S&P. So now that we've had a downturn in the S&P, we are very, very close to hitting the target on the VIX that I had from last week of 22.26. I'm keeping that intact. In fact, what I'm going to do is even extend that. Let me do that. It looks pretty bullish on that candle. So that big green candle, momentum indicators are still going up. I'm going to forecast that the VIX continues to go higher with the target up here of 22.17. Some of our option traders who subscribe to the service along the VIX call, so they're about to take some profits here, I imagine, next week as the VIX goes higher. So I'm not making an outrageous claim on the short term for a price target 22.17, but I am keeping this longer term target that I drew weeks ago up here around 27.31, with a possible test of resistance up here close to 29. So we're taking this all in stages, 1 week at a time. Hope you're enjoying this service. If you do enjoy the service, please hit the like button, subscribe, and absolutely share it. I think a lot of your investor and trader friends will enjoy that as well. So let's move on to IWM. Right here we have the Russell 2000 ETF. As you know, on May 21st, I called an official top on this. We still have not yet completed the top. A top here, a breakout below would be a breakout below 210, a close below 210. So our subscribers know what to do there. We're going to be getting out of any of our long delta option positions, and we're going full speed ahead in delta negative positions. This right here is a gap fill target that I am not moving on. I'm just going to keep that just the way it is. I think next week we could very well see a downturn to fill that gap. Whether or not we'll bounce off of that gap fill support level will have to be seen. But right now I'm keeping that in place. Nothing is changing on IWM. Let's move on to the Qs. I have not called the top on the Qs. I have not called a top, at least not yet, on SPY. I've officially called the top on DIA as of last weekend, and as I mentioned, I called a topping pattern on the IWM as of May 21st. So that's still all in place. The reason I'm not calling a top yet on the Qs is because we still have an upward trend right here. Once that trend is broken, I think we could see prices much lower. So I'm going to keep that right there. I think next week could be the week that we break out of that trend line. You can see that we have a red candle right there on much higher volume today. Oscillator is still going down. So with a break in this short-term or intermediate trend line, I do believe we're going to head lower right here to fill the gap down here. So all I'm doing is highlighting that gap fill support right there at 368.10. Once that gap fills, we'll most likely see a bounce, but the bounce will be short-lived as the market goes back up to try to regain that trend. I think it will fail, and then that former trend line will absolutely turn into a resistance point. So keep an eye on that. That is for the Qs. Now, I've been periodically commenting on ETH. That's Ethereum. This is the ETF for that. In our option discussions, I've erased the targets, but I'm going to establish new targets here. I think what we're seeing here in Ethereum and even in the Bitcoin market, we're seeing a triangle pattern here that I think we could see a breakout to the upside. It's still early to tell, but right now I think we're going to see a downturn to test this bottom trend line or triangle line. Then I think we're going to see the breakout maybe later towards the end of next week. So you crypto traders, keep an eye on your charts. There's very little fundamentals that you can go on, but you definitely want to watch the technical signals, know where to place your stops, use the charts as a risk management tool more so than a forecasting tool, and I don't think you could go wrong with that. Now, going back to the supply chain problem, pulled up a report on what's happening in San Pedro Bay. Right now, we are seeing, off the coast of California, we are seeing record numbers of container ships at anchor or at berth. They are not moving, folks. Look at this chart. This is a nonstop upward trend, and that should concern everyone because not only will this affect the supply chain, it'll affect the inflation numbers, it'll affect our GDP. It just keeps compounding. Last month, I talked about the Chinese ports and all the container ships that are shut down and anchored off the coast of the two, number one and number two largest ports in the world, and now that is contaminating the U.S. ports. So I don't know how this is going to develop, but I certainly hope they find some relief soon, because otherwise this is going to cause major problems down the road. So with that, keep your eyes focused on the downside, keep your stops in place, learn how to make money on the way down, because we make money faster and bigger on the way down because it's a emotion called fear that drives prices lower, and we can capture profits from that as long as you're focused on the charts. Take care, folks. Have a good weekend. Bye-bye.